Both gold and US dollar are going up. Analysts observed that the US greenback and the yellow metal advances simultaneously, which is a rare occurrence, but it does happen and highlights the intensity of safe haven flows during the week. The sharp rally was driven by surging safe haven demand, geopolitical tensions, and the shift in Fed rate cut expectation. The geopolitical tensions alone added $170 to gold prices this week. Markets anticipate that around 53% chance of a rate cut in December, keeping gold appealing as a non-yielding asset. The Fed comments and mixed US economic data also shapes gold rally, balancing job strength with manufacturing weakness. Remember that this week we have Thanksgiving, which is going to be a bank holiday in the United States. And once our friends gobble down the turkey over the pond, they're going shopping. It's Black Friday. The consultancy firm Bain estimates that from Black Friday to Cyber Monday, US retail sales could reach a record-breaking $75 billion. To give you a comparison, the UK only generates $7.5 billion at the same period. But before the US is going into bank holiday, we have some important data such as the Federal Open Market Committee meeting minutes. And of course the US revised GDP figures. Jay Powell recently reiterated that the bank is not in a hurry to cut interest rate to a level constrained growth, given the underlying strength of the US economy. Starting off with the fundamentals and the big picture, you can see that this week we have a half week. Monday is relatively quiet with no economic activity at all, so most of the market is going to be moved by the geopolitical tensions and the rate cut expectations. Tuesday the 26th, you can see that we have CB consumer confidence and new home sales. Not the sexiest data, but at least something we can trade. And of course, on Tuesday evening, we're going to have the FOMC meeting minutes. Many professional traders anticipating a dovish narrative from the FOMC committee members. Jay Powell recently reiterated that the bank is not in a hurry to cut interest rate to a level constrained growth, given the underlying strength of the US economy. And on Wednesday, you can see that the economic calendar is absolutely packed. The reason for that is because Thursday and Friday are bank holiday in the United States. Thanksgiving, Friday, the market is going to close early. Therefore, all of the data releases have been pushed to Wednesday. So on one single day, we're going to have the continuing initial jobless claims, which usually reported on a Thursday. Then we have core PCE price index, another important inflation indicator, and the third revision of GDP Q3. So definitely Wednesday is the prime day of the week. Moving down to the technical analysis part, you can see that gold is in an upward momentum after the sell-off, which started on around the 30th of October. This week alone, gold added about $170 gain, which equals to about 6% of the overall market price. This momentum was purely driven by geopolitical tensions and the mixed economic data, which sometimes was quite deflationary, and market participants estimated a 56% rate cut in December. So adding all the factors into the gold analysis, what I see right now, mixed with technicals, because we can see that gold is trading above the weekly pivot, and if the price is above the weekly pivot or the daily pivot or both of them, that is a bullish signal. So combining the technicals and the fundamentals, what I see on gold is more upward momentum, but be careful because any war-related escalation or de-escalation can heavily affect gold prices. My initial bias remains cautiously bullish on gold, and what I see is until it stays above the weekly pivot, continue to buy. The first take profit should be at around the previous lows or highs, which lines up exactly with the daily pivot. Then we might have a correction and a continuation upwards. Trend is your friend, so until the trend doesn't break, just keep buying. And of course, this is not a financial advice, but I'm showing you my positions right now. So you can see that today I entered into 3 positions on gold with the wide stop loss, but these lot sizes are not that big, so I can afford to have 100-150 pip stop loss. Considering that gold can move up to 1,000 pip a day, this is nothing. So as we speak right now, gold is pretty much at the same level where I entered the market. So if I was a late entry and watching this video right now, I would definitely enter at the current price, putting the stop loss well below the weekly pivot and the previous highs or lows. First take profit target, obviously the daily pivot, which lines up with previous highs and lows. Then the second take profit level, again a previous high. at 27.18, and then you can look left on the chart and see where was consolidation on the market. Next profit target, obviously 27.35. So this would be an ideal final take profit level. But if price manages to climb this high, analysts are saying that there is a possibility that gold is going to reach 2,800 this year. I like to keep it reasonable, so make the money, take the money, try to take out as much money from the market as possible, because a profit that you lock in is yours. No one can take it away. Remember that. And if you're struggling with the money, FOMC is now offering a 50% deposit bonus. Now, I've been using these guys for over 3-4 years, and I have absolutely no complaint. Customer service is beyond anything else. And let's admit it, 50% extra margin or bonus on your trading account in the current market volatility is a no-brainer. So if you want 50% deposit bonus, go to the website. You can find the link below the video and claim your 50% deposit bonus. If you scroll down, you can read all the information about the deposit bonus, how to redeem it, and what can you do with it and what you cannot do with it. But I repeat again, this is free money. The entries I showed you in this video, I also shared to the members in Discord. So this is the Alpha FX VIP or Premium Discord, and you can see that this morning I shared the signal with the same chart for the members, adding price, stop loss, and potential take profit levels. And this morning, the position was running at 70 pips, and now we're just experiencing a little bit of pullback. But don't be afraid of a pullback, because the pullback is just another opportunity to enter the market. So until price stays above the weekly pivot and stays above around 26.30 price levels, I'm expecting a cautiously bullish upward momentum. I'm saying cautiously because, of course, the war-related news can heavily affect the market from minute to minute. Guys, if you enjoyed the video, please hit the like button and leave a comment. This is the Alpha FX.